Yeah, good morning. Welcome to the event here. See people coming in. All right, let's see. Jasper, I saved you a front row seat, so come on up. Hey, if you like, in the Q&A box, put in where you're from, and then it'll give us a bigger sense of who's in the audience, who we need to really make this count for. Yeah. Dan, how are you doing? Let's open up the Q&A box here to take a look. Pittsburgh, all right. That's not too far. I'm in Bethesda, Maryland, outside of DC, so we're not too far away. Not neighbor, but not too far. Georgia, all right. By any chance, Atlanta, Georgia? Jasper. Yeah, we got team members in North Carolina. We got team members, 32 people across 3 different continents, so all over. Hey, come on, we're going to get started literally in just a minute here. I want to make sure. Curtis is in Virginia, not too far from where we are. So Greg and Pete, you guys recognize anybody here?
Not yet.
Not yet. Spring Lake, North Carolina. I know that.
Spring Lake. Why do you know Spring Lake?
So my daughter goes to East Carolina University, and I remember seeing signs for Spring Lake on the way down there.
Oh, yeah. Pretty cool.
Nice area.
Yeah, Stone Mountain. Okay, it's good. So let's see here. Just another minute. Let people come in, find a seat.
Yeah. Get the coffee.
Right.
Get things rolling here. Well, so if you're just coming in, if you go to the Q&A box and put in where you're from, it just helps us know who's in the room and how do we deliver best for you. Ron, welcome to our event here. Okay, we're going to get going in just half a minute here. Let's see, Ohio, all right.
Oh, that coming in, yep.
One of the best CFOs I've ever had the pleasure of working with, yeah. One of the best CFOs I ever had a pleasure working with, Ohio, Defiance, Ohio, of all places. And you talk about somebody that's good to work with. Yeah, Maryland, that's good.
Tennessee, Nashville.
Fort Bragg. I got 2 boys in the Army. One just graduated from West Point. The other one is a freshman. So they might see duty at Fort Bragg.
Montgomery, New York. You're right. I've got family there.
Dallas, there you go. Okay,
Yeah, Boulder, Colorado.
One of my favorite places. Gorgeous out there.
Me too.
Yep. So you guys ready to launch here?
All right.
Sounds great.
We're gonna get into it to make good use of time. So my name is Kirk. I'm the CEO of Foresight CFO. In addition, I teach financial management to grad students at Georgetown University. If you know me well enough, you'll know that I got 2 sons I'm really proud of that both are serving in the military. And so I'm the father of 2, and Father's Day is coming up. I wonder if they remember. Yeah, right? I'm the husband of 1. So I got Greg and here, Gregory and Pete here from Merrill Lynch. So could you guys introduce yourself, and then we'll jump right into the economic outlook. Let's kind of get our heads up and look down the road a bit. So can you guys introduce yourselves?
Sure. I'll introduce I'll introduce us and kick off here. Thanks, Kirk. My name's Pete Delacroce, and my business partner and I, Greg Blair, we're both financial advisors at Merrill Lynch, and we head up an advisory practice that specializes in working with high net worth investors, business owners, and retirement planning strategies. We live here in Maryland, but we really work with clients all over the country, and it has certainly been a tremendously challenging time for all of us, from a health perspective and in particular, from a business perspective, the business owners that we work with, such a high degree of uncertainty. And we wanted to, share just some thoughts from Merrill Lynch's perspective on the economy, some things to think about, and then we want to provide some resources for you. So Kirk, you want me to go ahead and dive on in?
That'd be perfect.
Okay, great. So our time is limited today, but just in the next couple minutes, we wanted to share a few thoughts. Broadly speaking, from Merrill's research, we feel that, there was the initial shutdown phase that was sort of this shock and awe event. We went through and started this reopening process, which, continues. And now we believe we're sort of transitioning into this, what we call a reevaluation phase, where as things continue to move forward and businesses continue to open up, it's likely that we'll continue to see the spread of the virus continue. But overall, we still see the trend moving forward, and we'll talk a little bit about that. So we think that in the coming months, it's likely to be 2 steps forward and 1 step back, at least for the foreseeable future. But some things to think about. There's really 3 key areas to focus on as we move through the next couple of months that we think will have a significant impact on the economy, markets, and your business in particular. The first of those is obviously the virus in and of itself. There's this reopening process that's occurring. We're seeing a growth in the number of cases. We're in the summer months, and we're going to see likely travel pick up here, vacations and so forth. In the news today, we saw that there's another spike in China. So, around the world, we're seeing these cases pick up. So what does that mean from a business perspective, and what does that mean from a strategy perspective? If there's a silver lining in all of it, we've seen an increase in cases in states like Texas and California and Arizona. But the percentage of patients that have needed hospitalization has actually not increased versus where we were a couple of months ago. So we view the progress of the virus in the next couple of weeks is really a key indicator in all this. The second sort of area of focus that we're really watching closely, consumer spending. So in the shutdown phase, consumer spending is one of the biggest drivers of the US economy. And we've seen that spending pick up. Very good sign. The most recent number, we expected about an 8%, 9% increase, and in fact, it was about 17%. So from much lower levels, right? But we've seen the trend, and that's really what the overall market's focused on. The trend is improving, and it's improving a little bit faster than what we expected. So there's hopefully some more positive surprises. Earnings is another key area for the economy and for markets. And in a couple of weeks, we're going to get a glimpse about how much of an impact this has had on businesses, right? So we're going to start the earnings season. The end of last earnings season, there were about 30% or so of the large companies here in the US that said, we're not going to provide any guidance. We're not really sure where things are going to go. And when companies report, it's really important to understand what were your results from a rearview mirror perspective, but also looking forward, where do you see things headed? And that guidance was really not provided. We're seeing some companies give some of that guidance now, and those numbers are looking a little bit better than what some of the expectations were. So silver lining there. Also, from an economic perspective, there is a tremendous amount of cash on the sidelines. There's about $4.5 trillion in cash that's sitting in money market accounts or checking accounts that at some point we believe will need to go someplace. And it's likely that that money goes back into the market. So we've seen this recovery from the March 23rd lows. We think short term, there's probably going to be some continued choppiness, but with all that cash on the sidelines, we think it eventually finds its way back to the market. And the third key area of focus is the Federal Reserve and the stimulus that we've received through all of this. So we've gone through just an unprecedented event. I know that word is used a ton, but we have to remember the response has been unprecedented. Between the Fed and lawmakers, they've pumped about $10 trillion back into help this crisis. So there's a significant commitment, and Jerome Powell, who's the chairman of the Fed, they announced another program this week. They're absolutely committed to getting through this. So, as we look out and as we progress, if more action's needed, we certainly believe that the Fed and lawmakers will be there to push things forward. So those are really the 3 key areas that we're focused on. Yes, there's some risks. There's the science risk where we were talking before we started about the vaccines, and there's going to be some key data that comes out in late June, early July. The U.S.-China relationship is key. That's something that is evolving. And then, of course, the U.S. election, which is upcoming. So in terms of the overall research, please feel free to reach out to us. We have macro research that's provided by our CIO team, our Chief Investment Office, as well as industry-specific research that could benefit your business. When we look at a big picture, I'm going to turn it over to Greg now, who's going to talk more about some of those resources that we have available and how that can certainly help make a difference in your business.
Yeah. Thanks, Pete. Yeah, thanks for having me. Yeah, so Greg Blair, part of our Merrill Lynch team here. And to take what Pete mentioned and kind of drill down a little bit further, there's so much information floating out there right now. And the information is changing on a daily basis. So to take that macro overview that Pete shared and kind of whittle that down to how does it apply to your business, we have a couple of key resources that are available to you. One is what we would call just an industry report. So, and this is provided, it's kind of industry specific. We can provide you one to your industry with your NAICS code. And I'm looking at one right now. Usually we'll have up when we do these talks, it's amusement parks and arcades. I mean, who can't, put a smile on your face when you think about amusement parks right now. But really what the industry report does is it takes a look at specific analytics to your industry and kind of gives you an overview of, quarter by quarter, how things have transpired, what may be ahead, and gives you some key insights that could be relevant to your business, like revenue, operating margins, how are typical deals structured from a financing perspective. That's something we can provide very easily to you. We found it very helpful. And that can help transition even a little bit into a second offering that we have, which is what we call our peer profile analysis. So Merrill Lynch, we're part of Merrill Lynch. Merrill Lynch is owned by Bank of America. We partner with a number of different middle market and business banking specialists that actually will sit down and do a detailed analysis of your specific company. And we can compare on a confidential basis to all of the other companies that we work with at our institution. We can do that on a confidential basis. We give you actually a very concise and clear, here's where you are, and benchmark you against essentially your peers. We found that extremely helpful for our clients. It provides major insights into, where you stand. So those two things are readily available. We'd love to talk to you about that. Pete mentioned the research that we have available. There's the general macro information. There's also industry specific research that we have available. We have, I don't know how many analysts that we have at our firm. So we can get very detail oriented. So we'd love to provide you information from a research perspective. And then just one other quick thing I'd add too. We've been on a number of calls lately and getting a ton of questions from our clients on reaching out to employees. Obviously with everything that's going on right now, Pete mentioned the uncertainty. We manage 401k plans for companies. We're doing an increased number of educational kind of seminars, wellness topics, and just found that can really, really help kind of calm nerves and kind of, provide employees with a perspective as what to expect moving forward. So number of key takeaways there. We would love to help in any way that we can. Our contact information is up, and again, we'd love to talk to you. So we'll leave it at that.
Yeah, Greg, we're going to send out, for everyone who's here, we'll send out a link to get the slide deck, and as well as watch the recording again if there's something they want to go through a second time. And there was a question up about foreign exchange. I mean, what do you expect? What do you expect in respect to the dollar, getting stronger or weaker compared to foreign exchange in general out there?
Yeah, that's a great question. So if we just sort of go pre-COVID for a minute, the dollar was strengthening, right? And when the virus and the impact of the virus, really hit us a couple of months ago, the initial spike was the dollar got a little bit stronger, but then it sort of tailed off. And what that means just in terms of economic activity around the world, that's generally a good thing for global growth. So we saw the dollar weaken a little bit, and generally over the short term, we see that trend could continue.
Yeah, that's good information. And I'm going to really encourage, the CEOs out there to, reach out to you, get this report for your industry, because the impact of COVID has been very different for different industries. I mean, I was on a call earlier today about recruiting, and there's a big difference between tech jobs having a 2.5% unemployment rate versus hospitality at 13%. So reach out to Greg and Pete, and get that information about your industry based on what we know now. What does that forward-looking view look like? So
Kirk,
really,
there was one question on precious metals. Can I just quickly answer that from John?
Definitely.
Yeah, so just a lot of the question, a lot of questions around gold right now. Obviously, with all the Fed action that we've seen, what does that mean for the price of gold? When the Fed was embarking on quantitative easing back in 2013, post-financial crisis, gold really shot up because, the thought was we're gonna have high inflation. So our economics team thinks this go around, a lot of the stimulus that we've seen from the Fed and then the fiscal stimulus that we're seeing might go more to kind of fill holes. So we're not expecting like a hugely inflationary environment. However, we do think that there's a great opportunity for gold right now we've actually a couple months ago, our 18-month price target was actually twice 100% higher than where it is right now. So like anything else that can change from day to day, but we do see and have actually been fielding a lot of questions from clients on gold, its role in a portfolio, and it's a very unique thing to own, obviously. So, but we do see good things ahead for that. So just want to answer that real quick. Thank you.
Yeah, very good. So let's take it the next step here. We're going to go from, you got the economic outlook in general. You have the opportunity to get the outlook specifically for your business. But now we're going to pivot to talking about, how do you make decisions? What are the habits that you can use to make decisions about your business? And again, to help us really target our discussion around your business, let's do a poll to find out who's in the room. And I'm going to launch the poll. You'll see two questions pop up. One is, what was your top line revenue in the prior year? And the second one is, this year, due to COVID, what do you expect your revenue to do? Go up, go down, stay the same? And it'd be great if we can get a 70% response. And everything's anonymous, right? No one's going to see your answer. So, and I'll share the statistical results with the folks in the room here once we're done. So, yeah, all right, we hit 70. Let's see another minute here. See if we can hit that tipping point of 80. But we got 70. Very good. Excellent. Keep it coming. Let's make your voice count. All right. So, okay, a few more seconds here. I'm going to release the results. So if you want to, register in on the poll, please do so. 86%. This is like a high achieving class here. Georgetown should keep up with your scores. Okay, let's take a look here. Look at that. I mean, so, 45% of us feel like revenue is going to decrease. 23 got some upside, 32 about the same. Probably better than the economy as a whole. What would you think, Peter and Greg?
I would agree.
Yeah, these are actually kind of encouraging to see the expectations.
Yeah,
we got an all-star room here, Kirk.
That's fantastic. Let's take the next step and really find out. Now, what do we do? Right? We got the economic forecast. What do we do with that? And so, John, I want to introduce you. You're my partner at Foresight, CFO. So can you give us a few blurbs about who you are and what you do?
Yeah, thanks. So, Kirk, appreciate it. I've been working 5 years with Foresight CFO, and Kirk and I pulled this thing up from our bootstraps, and we're working specifically with small businesses in high growth areas. So we've got a lot of experience in bending the curve, so to speak, but on growth instead of on pandemic. So this is this is a critical time, I think, for people to use CFO services and skills. This is the time you need to really have your head up and looking down the road. So there you go.
Thank you. So let's kind of step in it here, get a little bit deeper. So we want to, we got the economic outlook. So we want to put, that outlook into the context of, why did you start your business? Are you a mountain climber that was inspired by an idea, or a freedom fighter who wants to have the time and money to do what you want, when you want? Some of us were inspired to do something that matters, right? Just because you can roll up your sleeve and do it, let's do it. And then there's others couldn't get a job, right? At some point you hit that pyramid and might want to start a business. And so, some are fortunate to grow up in a business, and it goes from mother and father to son or mother and father to son and daughter, right? So lots of different options. And then some recognize, I think Pete and Greg would agree with this. I mean, most of the wealth in our country is generated by business owners. So maybe you want to set up multi-generational wealth. But no, as we talk about pivoting, think about your why. Why are you here? Why did you do what you did? Because it's not easy to start a business. So let's really get ourselves into the right space where in many respects, being a CEO is like being a fighter pilot. When it's done well, you have clear objectives out in front of you. You know what you're going to. Your team prepared you for today's mission. Your machine is working, right? And for a fighter pilot, it's got to be working really well. And you're moving fast, really fast. And you have both you have instruments internally, a dashboard to monitor the entire operating system that you're flying with, as well as you have systems to monitor the outside, the external threats that might sneak up on you. So being a CEO, that's the feeling. It's moving fast, and a lot of times answers aren't clear. So this is what it feels like when you're flying, when you don't have the visibility, when your dashboards aren't lit up, when you don't know what's going on in different parts of your company. It could be from top of the funnel sales all the way through delivery and maybe into your back office, right? Cybersecurity or finance and accounting, that nervous system of your business just isn't working. So you're flying blind. Literally in this condition, you're jeopardizing whatever it is that you cared about, that your why. Plus, with certainty, if you don't have visibility, you're leaving money on the table, and the value of your business isn't what it could be. So, a key thing, I think a lot of us learned, military background myself, building private businesses for 30 years, a lot of us learn you can't get there alone, right? And as a leader of your business, you're the expert in what you do. You're the expert about your clients, your marketplace. This is what got you to, take that pilot seat. But you can't soar alone. Great pilots, great athletes, great CEOs all have some kind of team. It could be a board, it could be a CEO, coach, guides and experts that help them find their way through. Plus, you have team members that you rely on, right? These fighter squadrons don't fly by themselves. They have team members who are keeping their eyes on different parts of the mission. So accountability is a key factor, right? You're not expected to know everything. Especially as your business scales, have your arms around everything on your own is diminished. So you can't get there alone. And all the research shows us that having the right people, the right guide, and using the numbers will pay off for you. It goes back to Napoleon Hill, which he wrote his book in 1929, all the way through more recent publications. Having the right people, using the numbers will give you much greater visibility to act on. So remember this: if you don't have the right people, the right team, and using the numbers, you're more likely to hit a stall point and drop like a jet does when it runs out of fuel. So let's not do that. All right, John.
All right. Well, thanks, Kirk. So that's kind of that looked a little grim, that fighter plane dropping in. But in this case, I think as we didn't run out of fuel, we all kind of feel like this lady in the picture where, what the heck? And so I think this is obviously I won't say unprecedented because there's a lot of bad things that have happened to companies in the past, but right now, this is amazing and far-reaching challenges to business. So how you respond to that is going to make the difference between the doing well or doing excellent or surviving in this environment. So we want to take a look at that. There's certain fundamentals to running a business, a high growth business, that are the same in a challenging time. So we want to kind of cover those. We're going to go through those, kind of outline the steps that you should be thinking about as you pivot your business. Okay, let me next slide there, Kirk.
Mm-hmm.
So everyone's going to have to pivot, even if you don't have to pivot much. You're going to have to do the analysis to see what's coming down the road. And the way to do that is these 5 steps. We call them the 5 habits. Number 1, make sure you have good numbers. A lot of people, their accounting system is designed to pay taxes. Just want to know how much extra you have at the end of the year that the government wants. That's not actually accounting. Okay. Good numbers means that you've got numbers, you can get individual P&Ls for different locations, different product lines, vendors. Your numbers have to drill in and be designed so you can drill in to get productivity measures out of your accounting system. So that's number 1. Number 2, you have to manage cash well. And whenever there's an emergency, you want to have a pile of cash. So, and Kirk will speak about that in a minute. Once you've got your numbers, you've got the cash, and you've talked to Peter and Greg about the world and what the heck is happening out there, then there's a process where you evaluate your growth options. And that process is critical right now. Many people pivot because they have to. They ran out of money, their supplier can't get them something, or their customers quit buying. Now they have to pivot somewhere and they don't know where to go. They haven't thought about it. They haven't mapped out 3 or 4 alternatives. That leads to habit 4. Your financial roadmap now is not just kind of a steady upward rise to retirement. We're going to look at 4 or 5 escape routes and optional paths. And this is the time to be doing that kind of work. And finally, you got to look outside the box. You've got to look at your peers. You've got to get outside information, and you've got to think of yourself differently, because those are the companies that are going to survive this time. And more importantly, they're going to be able to thrive. Ideally, if you're well-positioned and you have a well-run company, you'll be able to pivot into some new spaces that are just being developed. And that's kind of and we don't know what they are, you don't know what they are, but if we get a process, kind of a healthy process, you'll see them when they come. All right, next slide. Okay, number 1. So this is, and I spoke about this a little bit. And if your numbers are tied to your productivity and your products and your geographies, you'll be able to compare them against each other and run a scoreboard or key performance indicators. Now, usually this seems like something that the big companies do, and that you read about in the business magazines, and isn't that cool? If I had someone from Harvard, they could do that for me. Realistically, software today, it's critical that you have your eyes on the dashboard, just like that guy in the jet plane. Of course, he can wait until he hears a loud noise before he decides to change something in the plane. It's much better if you can see a dashboard or a dial or a red light flashing on your dashboard. And so this is kind of at a time like this, if you haven't been doing that, it's time to have a weekly meeting. I'd say at least a weekly cash flow review, where you're looking at your sales numbers, your projected numbers, and your projected costs to really get ahead of the data so you can see it coming.
Yeah, John. The weekly KPIs really sort of track, what you need to see proactively, so that you can see kinks in the holes and intervene early versus late. It really fits well with doing that monthly financial statement review, because it just before the month is over, you have a chance to course correct. Certainly before the year's over, you have a chance to figure out wherever things are stuck, whatever's stalled. Management knows exactly what to go do from sales to operations. So that for many of the companies we work with, getting to the weekly KPI combined with that monthly financial statement, game changer. Because like
in a normal environment, reviewing your financials monthly is generally good enough for companies if they're kind of going on a slow or kind of a medium growth pace. But this is not just a growth pace, it could be a shrink pace. So this is time to ramp up the thing to weekly meetings, I think.
And don't make it hard. There's one number that's a good KPI indicator. Start with that number. If all you have is manual systems, do it manually in a spreadsheet so you can track it week to week. And then by doing that, there'll be another number that helps you. And at some point, you can do what's on the screen. You can fully automate it. And at that point, you're flying high and flying fast. Okay.
You want to talk about cash, Kirk?
I do. I mean, so cash, cash is literally that fuel in the engine that keeps you going. If you manage cash well, you get what it takes to stay in business. So it's having good cash numbers. It starts out with that habit John's talking about. You got to have a good accounting system, because that is a source of the data that's needed to do what's on the screen here. Where you're forecasting forward, all the money you expect in, based on future billings and your collection practices, with all the money that you expect going out, payroll tax, vendors. And you met with a 12-week cash forecast, you got that near-term view where you're able to match the money coming in with the money going out, so that you stay, your bank account stays positive. And if something's not working, you can see the cash trending down week to week, or at the tail end of this view, you still have time to fix it, right? Preferably fix it on an operational level. In some cases, make sure that you have the line of credit or other sources of working capital to keep things going. So this practice is key for performance. Just like a practice that's not used very often is measuring the cash conversion cycle. How long does it take me from when I do the work to when I bill my clients? What is the number of days between that, and from when I bill my clients to when I collect, how many days? If you measure that, you start to see opportunities. Traditionally, I don't know why people do this. Traditionally, you do the work for a month. Meanwhile, in the month, you're laying out payroll, you're laying out rent expense, utilities, and then after the month is over, businesses produce a bill within week 1 or week 2 to bill their clients, and then they put something called net 30, like in 30. So you got the client has from month 2 to month 3 if they pay on time, right? Maybe slide into the month 4. So you could have 3 or 4 months of making payroll twice a month, paying rent once a month, and everything else you got to pay for, including materials, before the money comes in. That cycle, I don't know why things started out that way, but that's a negative cash cycle. That by measuring your cash conversion cycle, what's shown on the screen, twice a year, you start seeing opportunity. You think, well, what if I reduced my collection times by half? What does that mean for working capital? And you can see this actual example, client not named, but they were able to free up over $1 million of working capital just by breaking through traditional practices. So that's cash, keeping enough fuel in the tank to go far, right? John, you want to take us through habit 3?
All right. So once you've got your cash, you've collected your cash, you've checked your vendors to make sure they're going to be able to pay, give you good terms, and you checked your customers to make sure they're going to pay you. You got the cash. Now there's several options here that you need to identify on where you can pivot to, and there's some scores. We do a scoring system on risk. So one of the things in a difficult economic situation like this is your weaknesses become multiplied or amplified. If you're just barely getting your bills paid and the financial performance is weak, it's amplified or multiplied in a crisis. Positive cash flow. Do you have a unique position in the market, or are other people going to pivot into your market space and take some of your customers? Customer satisfaction has a chance for it to really drop in a situation like this because you're not open. And finally, if you're the one who's holding your company together, when a crisis happens, we need twice as much of you. And so developing your team, developing your leadership team, and those skills are really going to protect you in a crisis. So these are the kind of things you want to look at when you start to pivot. And the end that you're pivoting toward, let's go down to the next slide, Kirk. Okay, when you pivot, you can't forget that you're here on a continuum. You started, there's a foundation, you have your basic business, you're buying and selling something, services or skills. And then if you do it well, you're getting profit from that. And if you do it really well, you've got a multi-year roadmap and a strategic plan. And then when you get done, you'll have options. You can go public, you can sell to somebody, you can give it to your kids. There's options to build value in this business. When you're deciding whether to pivot or not and how to pivot, you can't lose track of this pyramid, because sometimes you're running out of cash and it's easy to jump on the next shiny object, and it actually doesn't work, right? You need to have a kind of a long view, right? And a set of numbers that accompany that long view of what your actual goal is. As Kirk pointed out, when we started the slideshow, why did you start this business? You didn't start it just to go out dramatically in the COVID-19 crisis. You started it to kind of build something long-term and create value and have longevity, have legs. So this is when you're pivoting, these are all factors to include, and the best way to do it is to weight them. Next slide there, Kirk.
Hey, John, if I can add one thing here. I mean,
Yeah.
Literally quarter to quarter, those 90-day sprints, when you're thinking about, what's the next step with your business. When CEOs do it using this lens, they get clarity. There's so many different options. I mean, you go to a conference and there's so many different silver bullets that are all going to solve all your problems. But this lens allows you to evaluate them. What makes us unique, right? Is the business dependent on me? Because if it is, I am the business, and that means we have constraints, right? Can we get recurring revenue? Because recurring revenue is more predictable, more stable than project revenue that begins and ends, right? So these things, plus not being dependent on any one customer, even government contractors, a lot of times they got a couple contracts with the same agency, and if anyone's been around for more than a few years, I mean, there's freezes, and there's situations where they, the client never pays. So this lens will help give you, how do you build a robust, less dependent business, so that you can survive and thrive through challenges like many of us are facing now. And again, today's benefits is you got more cash in the bank, more profitability on your bottom line. But tomorrow's benefit is you're maximizing the value of your business, because you do have a transferable business if these qualities are built in. These 8 qualities are built in to your business. But you start early. I mean, as you're doing some of the foundation work, make decisions today that lead to a good place for tomorrow, right? And then everything kind of, things do work out, and you do have more clarity and confidence.
All right. So I absolutely, that's actually the framework for this slide, which is actually our pivot slide. Once you have accomplished all those other things, which are not easy, and once you've gotten the reports and you've checked all the knowledge, you've got a set of numbers. But at the end of the day, this business is going to run on a synthesis between the numbers and your business instincts and your personality, your call. So the final step in pivoting and deciding which way to pivot is to take these two and merge them together and put them on a grid and get some measurements so you can weight your choices. There's never going to be, it's very seldom that there's 100% clear choice, go this way or go that way. There's always 60-40s. And the best way to make that decision is with a set of numbers underneath it. You still may guess wrong. You still may decide to sell when you should have bought, or you might buy something that you shouldn't have bought. But it won't be because you didn't have a full set of numbers and also a full strategic plan to go with those numbers. As Kirk often says, it's crawl, walk, run. If you don't have a perfect strategic plan, well, okay, let's start with one on the back of a napkin, because that's better than nothing, right? And you add these things together and layer them in, and now you've got a decision matrix, a decision net, really, that helps you make your pivot in a good way. So we none of us here on this call can tell you which way your business is going to have to pivot. But I think we all have some tools that could help you. So I think that's the key point here is layer these tools in and call us if you need something and kind of put it together to get to this point where you're making really good decisions.
Yeah.
All right.
Yeah, John, one thing I just can't, so this tool about growth potential, you're evaluating, should I do more with existing customers and existing products or move to new clients and new products and services? So you're making this, this trade-off. One of the things that is more immediate than it has been in the past is, do my target clients have the ability to pay, right? So if they don't, then you want to pivot real quick to those that do. In the past, it wasn't so much, it was kind of assumed that your clients, somebody you're contracting with has the ability to pay. So this is a good tool. It's simple in its construct, but when a management team has this conversation together, most of the time there's some wow factor. Like, wow, the CEO learns things from other team members that they didn't know about their marketplace, and together collectively we can all make better decisions. So it's a powerful tool, even though it's simple in construct. And we do have the exercise that you can take yourself through it. If you email me, I'll send you a copy of it. Okay, you ready for the next slide, John?
Okay.
Habit 4.
All right. So once you've, I think I think we're back on 4, Kirk. One back.
Yeah, habit 4, right?
Yep. Okay,
Yep.
there we are.
Mm-hmm.
So this is so once you've got your priorities set, you've picked your ideas. You need to create a financial roadmap for that idea, not just this month or this year or this week, but you got to go out a couple of years to see what the long-term benefit and effect is. So, and this requires requires some long-term analysis on your financials. And not everybody's ready to do this, but you have to do something again, because sometimes there's a wall or a cliff down the road, and you want to be able to see that before you get halfway built down there. All right, and
yeah,
the last one.
Just to say a few things here, this is your flight plan, right? So you figure out what can I afford under different scenarios, best case and worst scenarios, what can I afford? And then beyond that, how do you engineer profitability, running scenarios? Well, what if, so you can really unlock that thinking, what if I go with A versus B? And you can see the numbers, right? And so that it starts out with a 12-month rolling forecast, and then it goes into a multi-year. So you're getting to that summit. But the most immediate thing for most business owners is that at least 3-6 months of a rolling forecast, getting up to 12 months, because it's a skill to be able to develop this where you can plan and execute with the numbers and come in within a small margin of error. Okay, so let's go up to habit 5.
All right. And the last one is this has to be tied to not just some immediate numbers, but you need to look at your competitor benchmarks and your reality check. It's one thing to come up with scenarios in the boardroom and make out a bunch of spreadsheets about what could happen and what might happen. You need to come back to the real world and look at someone like Peter and Greg mentioned about the competitor benchmarks. Those kind of analyses are important to check whatever you pivot toward, because especially now, we're not certain what you can't just extend from the past. You have to kind of look at all the variables that might land. I mean, like they mentioned 3. So you have an election coming up with two parties with different economic philosophies. You've got China, and it has to decide what it's going to do on the world stage. And you've got a small bug that seems to be really the most powerful thing on Earth right now. So it's important to shake it up, to look outside the box, to get outside information. Once you've made your pivot, run it through this filter, this reality filter.
Yeah, that's really helpful. And just to bring things home here, we're gonna here we go, screen refresh. Okay, so here we go. Screen screen's having a little bit of trouble keeping up here. So we want to be clear. I mean, the type of, the habits, having that clarity about your way forward. I mean, this is not accounting work, and this is not tax prep work. This is growth CFO work, is that forward-looking piece. The accounting can definitely is the one to make sure you have good numbers, right? All the way through those monthly financial statements. But starting with weekly KPI, that's a different skill set. So what Foresight does is we help CEOs win more customers, keep the ones they have the right people to deliver quality, and then access to capital at favorable terms, right? And making sure you have the numbers to do that, and that top percentile financial performance, which means more cash in the bank, increased profitability, and maximizing the value of your business. And we do this through growth CFO and accounting work, and we do it with the numbers. So it's a really good complement to what CEOs are good at. And we're at Foresight, we're able to beat full-time CFOs because we really come at it as a growth CFO team. So our clients are getting the benefit of multiple CFOs and multiple expertise. So we never hit those stall points. We're always looking at the next step to proactively get ahead of things with our clients. And we stick our necks out. There's a relatively small investment in Foresight services, and we, based on the business, we can put a marker in the sand about, where we're going to get to and how fast. And every 90-day sprint, we're accountable for those results. So if you're interested in getting your growth potential exercise, that one that John walked us through, or if you want to have collaborate with me about your business, then, shoot me an email. And we'll hop on a call and, this CEO to CEO to talk through things, find out where you want to go and some options to get there. So very much appreciate you all, jumping on the phone and spending this time with us. Greg and Pete, thank you so much for giving us that economic, that look forward about what's going on. So thank you all. John, thank you. Always enjoy doing something with you.
All right, welcome.
All right.
Thanks, Kirk.
See you soon.
Thanks, Kirk.